Okay, Chairman, we are now live.
Okay, thank you very much indeed. And good afternoon, good evening, everybody. Welcome to a virtual meeting of the Audit Committee at the London Borough of Hillingdon. This virtual meeting is also being broadcast simultaneously on the Council's YouTube channel, Hillingdon London. The purpose of this committee is to review and monitor the Council's audit, governance, risk management framework and financial and non-financial performance, as well as overseeing the financial reporting process of the Statement of Accounts. My name is John Chesshire and I'm the chairman of this meeting. Before we start though, some important online housekeeping for everyone present. Please ensure that any mobile phones around you are on silent. Please keep your microphone muted when not speaking and then unmute to speak, trying to avoid not switching the system off and having to log back on, as I did last time. As chairman, I'll call on those to speak during the meeting. In terms of technical meeting control, if any councillor leaves the virtual meeting partway through for a period of time, for example, through a lost connection, I will continue the meeting unless we're not quorate, and quorate is 4 members today. We'll do the attendance roll call now, everyone, before we move on to the agenda. So I'll do a roll call of the councillors and others present to confirm attendance. Please indicate you are present when I say your name. So councillors first then. Councillor Goddard.
Good evening, Chairman. I'm present.
Thank you very much. Councillor Eggington.
I'm present. Thank you, Chairman.
Thank you very much indeed. Councillor Flynn.
Good evening, Chairman and everyone else. Yes, I'm present.
Lovely. Thank you very much. Last but not least, Councillor Lavery.
Present, Chairman.
Thank you very much indeed. Please, can I ask that officers confirm their attendance when I read out their names as well, please? Paul Wayman, Corporate Director of Finance.
Present, Chairman.
Thank you very much. Muir Lowry, Deputy Director of I said this wrong last time, Exchequer Services and Business Assurance.
Present, Chairman. Thank you.
I'll do my preparation for pronunciation better next time, I'm sure. Sarah Hydry, Head of Internal Audit and Risk Assurance. Nice, easy job title there. Oh, can't hear you, Sarah. Sorry.
Sorry, Chairman. I'm present. Thank you.
Thank you very much indeed. Zach O'Neill, Head of Counter Fraud.
Yes, present, Chair.
Thank you very much. Stephanie Rao, Risk and Insurance Manager.
Present, Chair.
Thank you, Stephanie. James Lake, Chief Accountant.
Present, Chair.
Thank you. Neil Fraser, Democratic Services Officer.
Present, Chairman.
Olivia Richards, Senior Accountant, VAT and Accounts.
Present, Chair.
All right, and welcome to the committee, Olivia. Suresh Patel, Ernst & Young.
I'm here, Chair.
Thank you very much, Suresh. Nice to see you. Adrian Balmer, Ernst & Young.
Present, Chair.
Thank you. And last but not least, Larissa Midoni, Ernst & Young.
Present, Chair.
Okay, thank you all very much for that. We've got a full house, full membership, so we'll move on. And we'll take the agenda first of all. And I think it's just part 1 public agenda items today. So every item will be held and discussed publicly. Agenda item 1 then, apologies for absence.
Thank you, Chairman. All members are present.
Thank you very much indeed. Agenda item 2, declarations of interest in matters before this meeting. And I'll take it that there are no interests if nothing is declared. Now, Tony, sorry. Councillor Edgington, we can't hear you.
Yes, you can now, I hope.
Thank you.
I'm declaring an interest as a retired member of the pension fund.
Lovely, thank you very much. And that's noted. Are there any other declarations? Sorry, yes.
Sorry,
Neil.
Chairman. Councillor Eggington, can you just elaborate, just for the benefit of the recording, that it's a non-pecuniary interest?
It's a non-pecuniary interest as a member of, as a retired member of the pension scheme.
Thank you.
Lovely, thank you very much. Thank you for clarifying. Agenda item 3, to confirm the reports in private and in public on this agenda. All the items, as we said, are in part 1 and will therefore be considered in public. Item 5 can be found in the Agenda B papers that arrived just a little bit after. Agenda item 4 then, to receive and agree to the minutes of the last meeting. I'll take it that the minutes are agreed, as agreed, unless there are any comments. Okay, sorry, Sarah.
Apologies, Chair. I just wanted to raise an item on page 2. There was a query from members about the employment status assessments. It's the last paragraph of the minutes on page 2.
Thank you.
And members sought clarification about whether checks were carried out pre-contract or post-contract. And I can confirm that they're carried out pre-contract in compliance with the HMRC guidance and the Criminal Finances Act.
Lovely. Thank you very much for that clarification. I think that's the kind of answer that we were looking for when the question was asked last time. Okay, thank you very much. Any other comments or observations on the minutes? Okay, then the minutes are taken as agreed. Thank you very much indeed. So we'll move on then to agenda item 5, approval of the 2019-2020 Statement of Accounts, including the annual governance statement, external audit report on the audit for the year ended 31st of March 2020, and the external audit report on the pension fund, annual report and accounts 2019 to 2020. So, ready to go.
I think that would be EY.
Is it Suresh or was it Adrian?
I think the officers have got a paper in advance of our reports, but I'm happy to go first if.
Yeah, I'm happy for EY to sort of prepare or present their papers, and then I will comment where required.
Is that okay, Chair?
Thank you very much. Yeah, absolutely fine. Thank you.
Okay. Well, good evening to members of the committee. You've obviously got two of my colleagues, Adrian Barmer and Larissa Medoni, with me this evening, who will also be taking you through aspects of our 2 reports that we've got. I just wanted to give you a bit of kind of national and maybe sort of London context in terms of this year's audit, and then I'll move on to sort of next steps in terms of actually signing the accounts. But I think it's worthwhile just giving you that context, because I was just reflecting on this earlier on. Actually, this has probably been the most challenging audit period of my whole career. So I've been auditing local government bodies for about 25 years, and this has been the most challenging period of audit. And that's largely because of the impact of COVID, I would have to say, both in terms of just the, I think now the fatigue that most people are facing in terms of having to work remotely, but also specifically, I think for local government, is the impact that it's had on accounting for asset valuations, for consideration of going concern. Because if you think about going concern, we've never really had to focus on going concern as both preparers of the accounts and auditors of the accounts. And but I would also say on the going concern point, given some recent high-profile local authorities with financial resilience issues, then I think where we've ended up on going concern, and particularly your disclosure in your accounts, I think is a good place to be in terms of providing transparency and assurance that that your resilience is being well managed. So, having said that, it's been the most challenging, I should also say for working with you, it has remained a very good and cooperative relationship that we've had with the finance team. So we took a view collectively that we would start this year's audit a bit later than we normally do. So normally we actually start your audit in June and we're done by the end of July, and reporting by the end of July deadline as was. This year, collectively and in discussion, we agreed that one, you needed a bit more time to make sure you were preparing a good set of accounts and good quality working papers, and we needed a bit more time to make sure that we were able to resource your audit adequately. So I suppose what I'm trying to say is that whilst we're in the last week of November and the deadline is on Monday, we're actually in a pretty good position because the audit has gone relatively smoothly. We've had excellent cooperation from officers, and I'm in a position that, subject to you approving the accounts and signing the letter of representation this evening, I will sign your accounts off tomorrow morning. And to put that into context, by the end of last week, I think for EY, of our 183 audit opinions, we had only given about 10% of those. obviously got a number of audit committees this week. And I'm aware that nationally, that's a similar position, so not just EY. So I think there's going to be a significant number of local authorities who don't publish their audited accounts on the 30th, by the 30th of November. And I think that the position for you is a reflection, like I say, of the fact that we collectively thought through the best timing to do the audit. We've worked together on things like your going concern disclosure, because it has been a challenge in terms of preparing the accounts and making sure the disclosures, but we are in a very good position. And I'm hopefully you feel that our two reports reflect, whilst they reflect clearly we are reporting some issues, but the fact that we are going to be issuing unqualified audit opinions on both the council and the pension fund, no matters to report on your value for money conclusion, is a good place to be. So that was just my kind of context and introduction, Chair. I'm going to get Adrian to talk through the main council's audit results report and focusing on the status of the audit, because obviously we reissued this report a couple of weeks ago and things have significantly moved forward. There's some audit differences we just wanted to emphasise to the committee. I'll just want to then summarise the risks and focus areas that we looked at. Adrian's going to talk about value for money and I'll close on fees. And then Larissa will just give you a quick brief update on the pension fund, because we have reported the pension fund already to the pensions committee, I think on 2 occasions actually. So we'll close that off for other members of the committee who aren't on the pensions panel. So Adrian, do you want to pick up the status update, please?
Yeah, thanks, Suresh. So I'll just take the committee actually to page 13 of the Hillingdon Borough Council Audit Results Report. It's the executive summary page, which details the items outstanding as at the date of the report a few weeks ago. I'll just give members and officers a chance to get there. So in terms of where we are with the audit, I suppose, as Suresh just said, the audit is substantially complete, so all our work's complete. So on page 13 of the status of the audit, we highlight a number of areas which we were still working through a few weeks ago. So we've had successful internal consultation on our going concern assessment, and as Suresh has said, we've had excellent cooperation from Paul and the team in terms of working through that, and in terms of our data requests and various other aspects. That's been a kind of a success of the audit, I would say, in terms of getting to a conclusion and being able to kind of have a significant going concern disclosure within the financial statements. We've received the IS19 assurance letter from the pension fund auditor. We've done our final review of property, plant and equipment, and the other aspects of the audit noted here are all complete. I suppose if we go to the column on the right hand side, tonight we'll receive the final version of the signed statement of accounts. We'll do some final checks on those tomorrow morning. We'll receive the management representations tonight in the form of the letter of representation. And the last final piece of work we would need to do would be the whole of government accounts review, which has a later deadline. So actually the certification deadline for the statutory accounts is the 30th, which is next Monday. The deadline for the whole of government accounts review is actually a week on Friday, so it's the 4th of December. So we've received the initial working papers from James and the team, and that work will follow on from certifying the accounts tomorrow, and we'll report back to a future committee in terms of where we get to that with that review. Just at the bottom of page 13, we note some of the differences we identified during the audits. I think they probably focus on 2 key areas, and they're areas that we've picked up on the past, and they're actually consistent with a number of audits that we do across the country. So two increasing areas of focus for us are around the work we do around accounting estimates. So the 2 largest estimates within the financial statements are the estimates around property, plant and equipment, and the other significant estimate is around some of the assumptions that go into the IS19 pension liability. We note in terms of the first difference around the property, plant and equipment, these were actually differences, but we've kind of noted here they're actually judgmental differences. So we used internal specialists. So we have a team of internal valuers who were able to support us as an audit team to come to a conclusion on a specific range of assumptions feeding into the council's external valuers' assumptions. The outcome of that was that when we looked at an overall sample of assets, there were 2 specific assets actually which we believed were overvalued, and we've kind of stated there the value is approximately £4 million. Some of that's down to kind of specific assumptions used by the council's external valuers around land values and other aspects of valuation which can impact that valuation. The values aren't material for us, so actually we've been able to conclude on those and kind of ring-fence them from the point of view that of the 2 schools that we did identify, the difference is actually there were only 2 schools on the balance sheet from a secondary school perspective. So that's kind of why that particular point has been able to kind of be closed off as it is, and the value there we've noted is £4 million. The other area then of significant assumptions and judgment, I suppose, is around the IS19 pension liability. So this is very sensitive to specific judgments and assumptions. And this year there were 2 particular issues. One was the McLeod case, which officers and members are familiar with from previous years. And the other one was a Goodwin, a new case which emerged this year was a Goodwin, called the Goodwin case. So again, similar to what we did with the property, plant and equipment, we have a team of internal actuaries, and we were able to use them to support the audit team's assessment of the particular judgments and assumptions coming through from the external actuary, Hymans Robertson. On those particular points, on the McLeod case, the council did then receive a revised report from the actuary, which actually included an updated valuation for McLeod. And that particular value it was approximately 1.3 million. So there was a change in the liability by 1.3 million. On the particular Goodwin case, there was no adjustment made for that. So we've actually noted that as an unadjusted difference, and that's the 1.004 million. The assumption made by our specialist was actually that there could be up to 0.2% of your overall liability, and your liability on the balance sheet's just over 500 million. So that's how we've equated to the 1 million Goodwin case. And again, it's not material for us, so we're happy to conclude that actually it's got no material impact on the financial statements. So those were kind of essentially the 2 areas of financial statement differences that were unadjusted within the final financial statements. But as I said, they don't have any material impact on our overall opinion on the financial statements. I'll probably stop there if that's okay, and take any questions, any particular questions, if any members or any officers would like to kind of contribute anything.
Thank you very much, Adrian. James.
Yeah, I just wanted to sort of give our opinion of those 2 differences as well, if I may. We employ a specialist company to do our asset valuations, and this company, I think, do the majority of local authority property valuations. And the 2 particular assets are 2 relatively new secondary schools. And I would say that our valuers actually visited the schools in person. They've looked at the physical assets, and they're still actually in the process of snagging. So they're still making good certain things within the school, so updating the school. So there was also an issue in terms of obsolescence, and a slight difference in terms of obsolescence. And we just felt that our valuers going to the site, visiting the school, seeing the physical buildings, and with the ongoing sort of snagging, making sure the buildings are still in good condition, we felt that our valuer's approach was prudent and correct, as opposed to somebody in an office doing a desktop exercise. So that's why we were quite sort of happy with our approach. And again, we've sort of reached out to EY and said, actually we're quite happy if there's a difference of opinion, then we're happy to get our valuers to talk to your valuers in terms of coming up with a common approach, because obviously we don't want the issue sort of being a problem every year. So we're happy with what our valuers have done, but also we're sort of happy to talk to the valuers at EY as well in terms of changing our approach, or our valuers are in terms of changing the approach if they feel it necessary. And on the
I think on that point, James, I would wholeheartedly agree with that. I think we have had engagement at a national level between our valuers and also the external valuers that are used, and it's certainly something that we're keen to do. I think we're always going to have certain valuers will always have certain assumptions and kind of methodologies which they apply. I think the key message here that there's no material issue.
Exactly.
So I think it's a kind of a difference of opinion and slight assumptions which can have in this instance a not material impact, but certainly we're more than willing to kind of engage with you. I think the only thing I would say is that from an independence point of view, we have to be careful from any judgments that we give, because obviously we're given an assessment based on the assumptions used by your valuer as opposed to kind of instructing them in terms of what to do, because obviously under audit and standards we couldn't do that. But obviously we're more than happy to have that dialogue, and I spoke to Suresh earlier about this week how we kind of take that forward into the autumn actually.
Yes, it's how they interpret the regulations really, and if they're interpreting it in a way. So it's just making sure that we're both on the same page, I think, in that respect.
Yeah,
that sounds Very good, and I'm pleased that you've had the ongoing dialogue and communications on this. I think Councillor Goddard wants to come in with a question at this point, so I'll just pause, James, if that's okay. Councillor Goddard.
Thank you, Chairman. I don't want to labour this point too much because clearly the differences on the valuations were not material. I do think actually that it's incredibly important that there is a diagnosis for the difference between the two valuations, because if we actually run up against this again and the differences are material, we need to have a way through this, I think. So I think look, I think it's perfectly reasonable that different valuers will come up with assumptions that differ. But I would be keen to understand those differences.
Better understand it.
And have that as something that we take forward. Yeah.
Okay, thank you very much indeed, Councillor Goddard. James, was there anything else that you wanted to say around the process or any of the particular points?
No, just to touch on the IS19 valuation. Again, we spoke to our specialist Hymans Robertson, who again are actuaries to a large swathe of local authorities, and we did talk to them about the Goodwin impact, and I think they were assessing it at a slightly lower value of 0.1%, so it's £500,000, and they felt that and there's still so much uncertainty around how it's going to be applied that they felt it wasn't viable to actually change the figures. So, and with it being so immaterial, we decided just to go with the McLeod adjustment and leave the Goodwin as no impact.
Okay, no, thank you for that, and I can understand the position that you've taken there completely. Thank you. Councillors, committee members, Councillor Goddard, first hand up, so over to you, sir.
Thank you, Chairman. Thank you. A couple of points within the report, Adrian, that I would like to follow up on if it's possible.
Yeah.
First of all, obviously, as has been said, I think principally by Suresh so far already, going concern probably is a much bigger issue this year than probably ever before with local authorities. I would certainly, I've read the words on the page as far as the comments that EY make on going concern, but I wonder if you can perhaps add a little more colour to that, because I think as a committee that's something that we have to really understand, and I think it would be helpful to understand the basis of that the review that was carried out. As I understand it, you're going to look 12 months out from the date of signing of the financial statement, which is fine, but inevitably, it's a time of change for the council itself. We're not too far away from a 21-22 budget being finalised. That's in production. The last version of the MTFF was about a year old now, I think, from memory. So to understand the information that you had available to you and the major considerations coming out of that review, I think is something that I think the committee should hear, please.
Yeah, and I certainly second that, because that was an area of particular interest for me as well. So thank you.
Adrian, before you give a full and detailed response, I'm sure it's going to be, I also just wanted to clarify, because in the report we kind of refer to the potential emphasis of matter paragraph on going concern, but we are concluding that we don't need to do that. And the reason for that is because an emphasis of matter paragraph, in our audit opinion, is meant to highlight something that's fundamental to the reader's understanding of the accounts. And we actually think your disclosure is, one, sufficiently transparent and informative, but also you aren't reporting that you've got significant issues with either liquidity or your level of reserves. If you were in that situation, then we would be considering more carefully an emphasis on matter paragraph. But we have concluded on the basis of the work that we've done that we are not including an emphasis on matter paragraph. So I just want to make that clear. But Adrian, if you want to expand on the detail.
Yeah, so I suppose Councillor Goddard, it's an excellent point actually, and this for us this year has been a very extensive piece of work on all our clients, ranging from London boroughs to small district councils. And I suppose if I could talk you through kind of at a high level, so one of the things we started looking at is your forward cash flow. So what's your cash flow projection through to March 2022? So not just 12 months from the date, but actually beyond that. So it was looking at any particular pressure points within that. We then looked at your liquidity position. So what level of short-term investments in cash and cash equivalents do you hold on a kind of normal basis? And if you needed to access those within, say, 1 working week, how often could you do that, or how regularly could you do that? And looking at the nature of those investments in terms of how redeemable they were as well. So that was a couple of the kind of higher level particular issues we were looking at. Then within the going concern, and I suppose some of the aspects coming out of COVID, one of the things we asked for was quite a lot of information supporting your assumptions around some of your loss projections and some of the expenditure analysis you'd done and some of the kind of pressure points within that. We were then looking at doing some reverse stress testing. So what happens if actually your assumptions were wrong by 15, 20, 25%? Where would that take you to, and what would the impact that be on your reserves? How could you reposition or repurpose your earmarked reserves if you needed to, kind of quickly, to kind of come up with some additional money? We looked at borrowing options the council's considered. So in terms of over the next 2 years, what's the council looking to borrow, where the money is coming from, and kind of some of the strategic reasons behind that. So I think pulling all that together, that was able to give us an assessment to kind of say, how close are you to your kind of minimum level of prudent reserves, kind of your general fund position of the next few years? And also, how does your earmarked reserves look at the end of March 2022, taking into account your cash flow position plus your borrowing position as well? So I think taking all of that together, and we also looked at, interestingly, we were able to pull out some information from some independent sources. So the Institute for Fiscal Studies had done an assessment of all local government finance. So actually that's a tool that you as a member of the public or a member of the council can actually access. And it actually looks at higher decile and lower decile pressure points for the council. And you can then map that against other councils as well to see the position of London Borough of Hillingdon within that. And lastly, I suppose the other thing is that Paul was able to share with us some information in terms of London Borough analysis has been done, which was very helpful to kind of consider Hillingdon's position within that. So lots and lots of different sources of information, and trying to do some independent checks as well to kind of see any of the information or trends which may give us an indication which would put particular pressure on any particular one of those aspects.
Okay, thank you very much, Adrian. Councillor Flynn.
Thank you, Chairman. I've just got one sort of specific question. On page 25, it states under point 2 that there's been an overvaluation of or overstatement of the value of 2 secondary schools on the balance sheet in terms of their value. I just wondered if you could explain how that's come about, really, and how presumably that will be rectified. So I just wondered why we've got a situation where these 2 secondary schools are being overvalued.
So I think that probably touches on some of the conversation we just mentioned around the different assumptions applied by different valuers. I think the 2 particular schools we looked at, I think James talked about the
Adrian,
fact that
I think we've lost Councillor Flynn. I think he did what I did. He's back again.
Okay.
Sorry to interrupt. Just I thought you may want to hear the answer.
Sorry, I accidentally pressed the wrong button. I do apologise.
I did it myself last night.
I pressed the button to leave the meeting. Sorry.
Yes. So sorry, Councillor Flynn, I think there's 2 particular points which, from our valuer's perspective, was driving the overstatement of the valuation. One was around some of the assumptions being used for land values that the schools are actually sitting on. The second is a very specific point around obsolescence, or the depreciation factor that needs to be applied for new buildings. The particular valuers that are used by the council, they have a specific policy actually which doesn't recognise depreciation for the first between 5 and 10 years of the life of the asset. our valuers kind of disagree with that point and actually say that actually an asset 5 years into its life, there should be some recognition of depreciation. And that then tends to overvalue the building element, so effectively overstates the value of the building. So it's quite a nuanced point between two valuers, but kind of that's the kind of essentially the crux of the matter is that we believe that the land elements tend to be overvalued and actually the buildings as well tend to be overstated. So that's kind of where that comes from.
Thank you very much.
Sorry, Councillor Edgington.
Thank you, Chair. The question I was going to ask was related to the DSG, the Designated Schools Budget, and the adjustment which I understand has been made for that. I wonder if either Suresh or Adrian could explain what the differences have been, please.
So thanks for the question, Councillor Edgington. So I think the committee is very aware that this time last year we were reporting quite significant pressures coming through from the DSG, and obviously the pressures continued into this year and is forecast to continue again. I think the nuance that's happened this year is that there's been a recognition actually that where we were getting to last year was that there wasn't a recognition that you could have a negative reserve. And effectively what we've now tried to do is try to have a workaround moving into 2021, when actually the DSG position will be moved out of the usable reserves and will be taken into an unusable reserve. CITFID tried to bring in a statutory override potentially towards the end of this year, but given the timing of events, that didn't occur. So next year, we will see that the DSG position sitting within an unusable reserve. I think last year, there wasn't the guidance to support the fact that that could happen. And the risk that we were having to consider was that actually that the council could be liable to support that position from general fund balances, which we're aware that actually some councils had actually done that. So that was kind of the difference between last year and this year. And then moving into next year, the position again will change with the transition and the protection of that within a ring-fenced unusable reserve.
And I think it's worthwhile just being clear that that's all about the accounting treatment of the deficit rather than the deficit per se, which is clearly not going to go away anytime soon, is it? So, and you'll see that actually in terms of the VFM conclusion, that's what we looked at as part of our work there about your deficit recovery plan and your engagement with the DFE, which we were again, we had assurance on that you were engaging with the DFE and clearly trying as much as you could to manage that deficit position.
Okay. Thank you very much. Councillor Goddard.
Yeah, thank you, Chairman. If I can please ask a supplementary about that, and maybe it's maybe for EY this is an unfair question, and we may need Paul and James to help on this one. But I guess a slight concern I have is that if I mean, there are two things here. One is the finding a home for this deficit from an accounting point of view, and then there's the the very simple question of cash. And perhaps a concern is that if a slightly more permanent home has been found for this deficit, it may one might infer that actually the cash is not going to be forthcoming anytime soon. I mean, that's a question to EY in the first instance. I mean, am I right in making that construct? And I wonder if Paul has any greater insight into that.
Yeah, I'm hoping Paul's probably got a better insight on that bit than I have. But I think from our perspective, we would welcome the statutory override being brought in to resolve the accounting treatment. But as I say, in terms of where that deficit ultimately lies and who's going to actually fund it, I think that's probably more of a discussion between DFE and possibly MHCLG. But I don't know if Paul, you're probably more involved than I am in terms of detail around that.
Yes, well, I would love to know the answer to that. We've been making representation to DFE and MHCLG around finding a permanent solution to this problem for a while now. We had a very detailed meeting with DFE back in January where we went through our recovery plan in great detail, and we asked them was there anything that we could do that we're not doing in order to deal with the deficit, and they couldn't actually think of anything. So I think Suresh is right. The statutory override will make the accounting very clean, but Councillor Goddard's point around, well, we're actually cash flowing that deficit at the moment. So although the DSG deficit is ring fenced, it's our cash that's supporting that. So we can't just leave it there, and we are developing a recovery plan as we speak, refreshing it for the DFE. But I think it does require some sort of government intervention at some point to resolve the problem. Because if you look at the growing size of the DSG deficit nationally on high needs, it's hard to work out a way that local government could possibly come up with a recovery plan that could repay that deficit. I can foresee methods by which we can reduce the in-year deficit and maybe even over time clear the in-year deficit. But historical deficits, you would have to make a surplus on the DSG, and I just can't see it long term, unless you did it over 40, 50 years, how you would do that. So I think it's something the government understands, but there's so many other problems financially on the plate that it keeps slipping down the list. So the statutory override buys them time. It doesn't, it gets rid of a burning platform for some local authorities, and it gives them time to, think up a plan medium to long term. So that's all I've got on it really at this point.
Thank you very much for that, and I think it is probably a case of watch this space a little bit, but for the moment I think there are probably other priorities as you've suggested, Paul. Thank you very much indeed. I'm really quite pleased, actually, very pleased. I'm very pleased that I was getting sort of positive feedback from you, Adrian, and you, James, on how the process has run this year, in a very, very difficult year indeed. So, well done to you both and both sets of teams on bringing this sort of close to the line, over the line tomorrow, potentially, all being well. So, really pleased to hear that. Thank you very much for a good brief and I think very good answers to the areas of questions that we had. Suresh,
can I just ask, is it okay if we just quickly touch on the pension fund?
Sorry, yes, of course.
So I was going to ask Larissa just to kind of pick up a couple of points on that, because you will see in the pension fund report, whilst we are giving an unqualified opinion on the accounts, we are including an emphasis on matter paragraph in respect of your pooled property funds, and Larissa will just quickly explain that.
Yeah, thank you.
Please, Larissa.
Yes, thank you, Suresh. So I'm just going to reiterate a couple of points, since we already presented the report a few times to the Pension Committee. So starting with page 71, if we talk about the risk of incorrect valuation of investments, the work we did around that risk resulted in this emphasis of matter that Suresh mentioned, which it also went through internal consultations, and that has been finalized and approved. And what it means is that we're drawing attention to the uses of the accounts, to the specific disclosure around valuation uncertainty of pooled property funds, and that is not a qualification. And then one more point I just wanted to emphasize from our final report is that compared to the previous version, we completed the testing of the triennial data submitted to the actuaries, and as I mentioned at the Pensions Committee, there were a few findings around the completeness of the supporting evidence provided to us for the detailed testing of the personal data of the members. And we were able to eventually obtain sufficient evidence to complete the IS19 letter that we submitted to the council's audit team. However, we also raised a recommendation around improvements for maintaining sufficient evidence around the personal data of members. And we are aware that there are projects in place that management is in the process of implementing with respect to that recommendation. And that's everything I wanted to emphasize, if anyone has any questions.
Thank you very much, Larissa. Any questions? No, I mean, there's no questions from me on that. I suppose other than one to officers around the implementation of that recommendation. Is that something that will be sort of relatively easy and straightforward to fix, and so we won't be in this situation next time? Or is it a longer term systems issue?
Well, it's not just a Hillingdon issue. Also, let me just point out, it's a national issue in terms of data quality for pension funds. But we do have ongoing data cleansing projects that happen all the time. So it's an ongoing work. The latest data scores show improvements year on year. So we are working, and it is getting cleaner and cleaner every single year. And we are going through currently more projects and to actually cleanse the data. So it is ongoing, and it will be ongoing.
Okay, thank you for that, James. And sorry, I wasn't sure where the issue was. If it's a little more of a national one, that's a slightly different perspective. Then,
and Chair, just to be clear, so it's not an annual audit in terms of that data. It's because you had the triennial valuation. Right. So every 3 years there needs to be a more detailed focus on that membership data. So.
All right, thank you very much for the clarification. That's fine. That's my misunderstanding. Thank you. Any other questions? Councillor Edgington.
There were a couple of very small questions. One was on the accounts and the provision. God, I lost it. Sorry. On page 186 of the report, that's 89 of the accounts, to do with the legal proceedings and the 6.5 million costs. I just wanted to check, does that relate to the housing revenue account, or is it the general account to do with housing under note 38, contingent liabilities?
Sorry, bear with me. What page? Sorry, Councillor Edgington.
It's note 38 of the main accounts. The notes to the main accounts. That's on page 186 of the report to members, the agenda report. There's 6.5 million, which is the claim in respect of the block of flats. I didn't know whether that was housing revenue account or.
Yeah, that would relate to the housing revenue account.
Okay, and then there was another very small query. I wondered whether on page 168, it's got unusable reserves. I wondered if that should be updated, because it looks like there's been a change in the figures for the pensions reserve.
Yes, sorry, I did send out a revised statement of accounts. Yeah, that was one of the last minute adjustments we've made. So that has been updated in the draft account, the latest draft accounts. Yeah.
Okay, great. Well, I didn't see that latest draft. Okay, thank you.
Okay. Thank you all very much indeed. Thank you for the briefings, EY. Thank you very much for the answers to the questions, James and others.
Chair, can I just say I need to drop off. We've got another committee at 6 o'clock, so thanks very much for your time.
No, thanks very much, Adrian. Well done.
Okay. All right.
Work. Thank you.
Thank you. Bye-bye. Bye.
And I understand then that the recommendation is for us to approve the audited statement of accounts. And there's nothing here that causes me particular concern other than the questions that we've asked and everything else. So thank you very much indeed for the work on this year. Really pleased. James.
Sorry, may I just ask, obviously, normally we would ask you to sign the accounts and the letters of representation at the meeting. I've emailed you copies of those, and EY have indicated that if you email back saying that your email is effectively the signature to the accounts and the letters of representation, they'll accept that as a signature for this year.
I'll do that after the meeting then, James.
Thank you very much.
All right, thank you all very much indeed on that. Okay. Thank you. We'll move forward then to agenda item 6, internal audit progress report for quarters 1 and 2, 2020 to 2021. And that's the third quarter audit plan as well. So, Sarah.
Thank you, Chairman. This presentation refers to agenda item 6 on page 9 to 27 of your papers. The report presents the Audit Committee with summary information on all internal audit work covered in relation to 2021 quarters 1 and 2 and the quarter 3 plan. Since the last progress report to CMT and the Audit Committee dated the 2nd of January 2020, 7 assurance reviews are in progress, 3 grant claims have been certified, and 3 consultancy reviews have concluded. Details of all 2021 reviews can be found in Appendix A on pages. Following the advice from Audit Committee and working collaboratively with CMT, our follow-up process has been revised so that high and medium priority recommendations are followed up more robustly. This is discussed in section 3.4 on page 13 of your papers. You will also note that our performance against KPI 5 in chart 2 on page 15 of your papers is below target. This is due to the lack of internal audit work undertaken in quarter 1 due to the coronavirus pandemic. However, we are confident that this will improve as more audit work is being carried out. And section 4.2 on page 15 contains a summary of the London Audit Group survey, which benchmarks our internal audit team's performance and progress against COVID-19 against other London local authorities for your information, and thought that might be of interest to you. Appendix B on pages 19 to 23 of your papers contains the quarter 3 internal audit plan, which is presented for approval. So I've just briefly summarised the sections of the report that I wanted to highlight to the committee. There's no other matters that I wanted to bring to your attention at this time. Happy to answer any questions and to welcome any thoughts that you might have of areas of risk that internal audit should be considering. Thank you.
Thank you very much, Sarah. Colleagues, any particular questions, observations or areas of risk for the audit team to consider? Okay, I did want to ask a couple of questions briefly, Sarah. On page 14, you highlight one particular instance in paragraph 3.4.5 of a manager with 7 sort of outstanding audit recommendations, 5 months past the implementation date, with no sort of update provided. I presume this must have been a very busy frontline manager, was it?
Does Neil want to talk through that one? Sorry, I'll hand it over to Neil.
Okay, no worries.
Thank you.
Thank you, Sarah. Thank you, Chairman. Obviously, during the COVID period, senior managers and frontline operational managers had to take on different roles. And I think we've highlighted this example in the report, but not as an isolated incident, but as a wider pattern of, at one point, we were having 98% implementation of internal audit recommendations successfully implemented within the agreed timescale, and that's really slipped, and it's really slipped this year. And of course, so the context of it is pretty much most of this year we've had the implications of COVID. So what we're trying to do with the process of internal audit follow-ups is make it more robust to give corporate management team, wider senior managers, and of course the audit committee assurance that internal audit recommendations are being followed up promptly and that management are taking prompt action. However, there is the context of COVID. So what we need to make sure is we keep a balance in terms of knowing that whether it's a frontline senior manager or a very, depends on what senior manager is, what priorities they have. And so the idea within Team Central that all extensions on internal audit recommendations, implementations will now be agreed by Sarah. So on an individual basis, Sarah will have a discussion with the relevant corporate director before an internal audit recommendation is granted an extension in terms of the implementation date. So we understand that as part of that discussion, we get a better understanding of the pressures that particular senior manager is under to make sure that there is a valid reason. The one we've included in the report, it was a very senior manager. There was a valid reason because his service and him were redeployed elsewhere in the council during that period. So we've had to take that into consideration as part of the process. So we're implementing a more robust process in the follow-up of recommendations, but it's within the context of this is during an unprecedented time. Local authorities across London are really struggling, and we are in a position in Hillingdon where we're in a much better position, I would say, than most local authorities in London. And so it's just about in terms of how we approach the follow-up of recommendations going forward, getting the balance right, being robust, but making sure that we're still working collaboratively with management. I don't know if that answers your question, Chair.
It answers it well enough, Muir. Thank you very much. Thank you, Sarah. And, you know, I appreciate that it's been a difficult year, and I appreciate that some things will have slipped for certain. And when one is redeployed into other roles, then, of course, the focus isn't going to be on audit recommendations. I like the approach that you've mapped out here, though, for moving forward. And it makes good sense to me and feels like an appropriate thing for you to be doing there, Sarah. So I think that would be a very useful way of kind of having a little bit more oversight and visibility of, you know, reasoning, I guess, where there may be some delays desired. So thank you for that. Were there any observations, committee colleagues, about the sort of Q3 plan or anything else? Tony, sorry. Councillor Edgen.
That's right. In fact, it was the Q2, the consultancy review on page 18 of the agenda. There's one there which is a bit strange, and I would wonder why it was there, which is the Psychro Solutions Limited. Sarah, could you explain what that was? And I couldn't see very much understanding, so I can understand it.
No problem. So this was a piece of work that was commissioned by one of the deputy directors in resident services. It was concerning a duplicate invoice process that they'd identified, and they wanted internal audit to come in and give some advice over whether they'd picked up the issue, but wanted internal audit to consider the controls they'd put in place to confirm that they were suitable to ensure that the duplication didn't occur. I understand it was something to do with the agency that the contractor was working for and the contractor then also putting in an invoice, but the controls in place was that they've identified and implemented are sufficient post the issue, and we came in just to give them some advice over that process.
Okay, thank you.
Councillor Goddard.
Thank you, Chairman. Sarah, I seem to recall that the last time this committee met, you were telling us about some staff restructuring program that was going on. Can you update us on that? Is that all on track?
Of course, the senior internal auditor position and the internal auditor posts are both live. They are both ending. One is ending this week and one is ending next week. We have so far over 20 applications in both of those vacancies, across both vacancies, apologies. And so far we seem to have a good number of people applying, and we hope to start the shortlisting next week.
Okay, good, and fingers crossed with that. I am hearing of a number of audit teams, not necessarily public sector ones, but in other sectors, in effect closing down at the present time. So you may well be able to pick up someone, during this exercise. If not this time round, if you have to re-advertise, if you're unsuccessful this time, then potentially in the future as well on this, sadly. I mean, happily, but sadly, you know what I mean.
I do. Thank you, Chairman.
Thank you. Muir.
Thank you, Chairman. Just to add on that, if it gets to a point where the applications that we receive, either for the internal auditor or senior internal auditor, aren't of the quality that we're looking for, then what we would do is either look to re-advertise it or extend the deadline for a couple more weeks. So I just wanted to qualify Sarah's comments just in case the timetable does slip a couple of weeks. Thank you.
No, it makes perfect sense. Thank you very much. Any other questions or observations? Okay, I thought the Q3 plan looked good. I thought the subjects that you selected for review were appropriate and interesting, and I think I was pleased to see, in effect, a number of high-risk subjects there in the plan, covering a range of different activities. So, good luck with the kind of forward work, the current and forward work, and we'll be interested, obviously, in hearing the results of that in due course. So, thank you very much, Sarah. Thank you to the audit team.
Thank you, Chairman.
Thank you. Okay, agenda item, and I've lost my papers now. Too many papers here, not enough space on the desk. Agenda item 7, which was the counter-fraud strategic plan for 2020-2021.
Thank you, Chairman. So this is the counter-fraud strategic plan for 2021, and I'm just going to set out for you a few main points about the strategy, which for this year we have refreshed and updated to give what I feel is a clear vision and purpose for the strategy and plan in terms of our strategic approach and our objectives, and which obviously continues on our progress on our risk-based approach to counter-fraud work that the team use. So an important part of this strategy is the updating of the fraud universe, or the new fraud risk assessment for the council for 2021. Of course, post-COVID, there have been a number of new and emerging fraud risks directly as a result of the pandemic, as we all know that a crisis, in a crisis, fraud is something which does tend to pop up quite a lot bit more. This is detailed in Appendix A on pages 38 and 39, which will give you details of what we're considering our main fraud risks for this area. Another main part of the strategy is to set out our operational work plan for 2021, which gives you obviously a detailed look at how our resources are going to be used for the remainder of this year, and how we're going to respond to those highest fraud risks, giving you an indication of what we determine those fraud risks to be. And the final main part of the strategy outlines our new structure, which has recently been implemented and we've completed to recruit into all of the posts. This new structure does strengthen our skills mix within the team and gives us a team which is aligned by fraud risks rather than function, to give us a much more cradle to grave approach to fraud cases, and it gives us more clear lines of accountability within the team to individual fraud managers. So that's the main thrust of our counter-fraud strategic plan. I think I'll leave it there for that, and I'm happy to take any questions on it.
Thank you very much indeed. Any questions? Councillor Goddard, sorry, I've just seen the hand raised. Thank you.
Yeah, thank you, Chairman, and thank you for the summary, Zach. I guess I mean, maybe this was a futile attempt that I was trying to achieve, but I was trying to sort of create some sort of connection between the subject matter that's laid out in appendices A and B and the new structure that is in Appendix C. I mean, presumably the various areas of emphasis and the risk assessment that's in the plan does correlate somehow into these functional responsibilities. Is that something you can help me with a little bit more?
Yeah, sure. In terms of what we've seen in work that we've done in the past, there's been, we feel, quite a lot of inefficiency in case handling. So when it comes to, say, for instance, work that's happened, say, within revenues inspections or revenues investigations as well, a lot of that work was done by the old intelligence officers at the start, were then passed over to what we would call work officers who are verification officers. And then if the case needed to be investigated, passed over to an investigator, which were different teams managed by different people. So we felt that being able to align that casework all into a single team under a single manager was something that would help us to manage cases better and have a more streamlined approach. In terms of how the plan sort of aligns to the new structure in terms of like individual pieces of work, it's fair to say that for instance, revenues, inspections, investigations, that's a big piece of work in of itself. So for instance, there won't be the same amount of resource which will be put into that, or sorry, there'd be more resource put into that than, say, for instance, the blue badge operations, which we're doing very little work on. So without, obviously I could go into each in detail, but it's, for instance, housing work, there's a lot of housing work there, and there's an individual team to deal with that. And say, for instance, fewer pieces of work around the special investigations side, which has a team to deal with it. But essentially they'll pick up things like first-time buyers, residency checks, and internal investigations. And I haven't put internal or social on the plan because it's something which is comes up ad hoc, if you like. But say social services and emergency funding work would be within the special investigations team, but it has the least amount of resource to deal with it because it will be the lowest amount of work. So that's, if you like, the best way that I can describe it at this point. It is a new structure for us. But there is also, it's worth pointing out that within some projects, there does require some cross resourcing between the teams in order to deal with pressures. Like, for instance, with the grants verification work that we're having to do to cross-resource the teams. So, yes, I understand your question. The different pieces of work are resourced differently, and what's in the plan is not, I suppose, it's not necessarily clear about how much resource we put into each individual part. I hope that kind of answers your question, but please do come back to me on it.
Okay, thank you very much, Zach. Any other questions or observations? Zach, just one from me. You said you filled the vacancies. So how long has the kind of structure now been in place? Is it a matter of weeks or?
It's since about the middle of September now.
Okay. Okay.
That we've, yeah.
And is it bedding down okay as you hoped? Obviously, maybe some initial issues.
Yeah, some initial issues with transition between pieces of work because officers have had to pass over cases, finish off cases, and so on. But yeah, it's getting embedded. We're not 100% there, I would say, but we should be completed the transition by Christmas, I would think, fully.
Okay. Thank you very much, Zach. Councillor Lavery.
One question, Zach. You identify in Appendix A that the COVID pandemic gives rise to a number of new risks that didn't exist before. Do you expect that those will therefore transfer into your planned work in due course?
Yeah, I think it's fair to say that with those risks, it's not necessarily that all of them didn't exist before, it's that they didn't necessarily exist to the extent that they exist now. In terms of the planned work moving forward, I do recognise that not all of them necessarily directly feed within the planned work from us specifically, for instance, in areas like social care work, where the increased risk from the pandemic is quite prevalent, I think, to do with things like asylum seeking and people coming to us for emergency funding over housing and so on. So I imagine this will be something which features much more, say, for instance, in our planned work once we see those risks coming through and are dealing with them. But the planned work is something that evolves over, it's not something that I imagine to be static. So we will, as and when risks emerge, put in place measures to deal with those risks as and when they come up.
Lovely, thank you very much. No further questions. I think it's a good strategy. You know, good luck with it. It was good paper, well put together. It'd be interesting to see, you know, how this develops, Zach.
Thank you, Chair.
Thank you very much for that. Agenda item 8 then, the counter fraud progress report for Q1 and Q2 of this year. So I guess back to you, Zach.
Yes, thank you, Chair. Back to me. So again, this is the progress report and it's for quarters 1 and 2, obviously because we didn't report in Q1 on our progress. The main points to bring to your attention about this progress report is obviously, you're aware of, and we've mentioned before at committee, the significant impact on the delivery of counter-fraud services in Q1 through redeployment of the team in terms of lockdown. So this had quite a significant impact on our outcomes, and also the restrictions gave us quite a diminished service delivery in terms of what we could do in terms of face-to-face meetings, and being able to go out and carry out work within the community. So in terms of the results that we did achieve, these were largely due to work carried out in Q4 of last year that filtered through into Q1 of this year. So you can see that we did achieve results in Q1. So the big positive I do want to draw attention to is the work that we did do on the food delivery service, but also on the business grant scheme that we carried out assurance work for. This is set out in Appendix C on page 56 and gives you a detailed idea of the work that we did in that area. And as you can see from that, we've identified savings to the public purse worth over 2 million in terms of grants that we can recover. In terms of the counter-fraud work in Q1, there wasn't significant counter-fraud work, but as of Q2, I'm pleased to report that we have achieved loss prevention overall for both quarters, totaling 328,000, which includes 6 council properties recovered with a further 9 notices served seeking possession. And we have a full breakdown of this contained within Appendix B on page 55, where you'll see how these savings were made. In terms of the team's performance, something to note is that we've introduced a new KPI, this progress report, to deal with our revenues investigations work. But overall for quarters 1 and 2, we have achieved 5 green, 1 amber and 3 red indicators. And I feel that with a resumption of more normal operations, restrictions notwithstanding, we'll see some good progress there in quarters 3 and 4. But it is my view that the pandemic restrictions did impact our performance in a number of areas in terms of KPIs. So we do need to improve on that for quarters 3 and 4. So that's, if you like, a general summary of our working up to now. I'm happy to answer any questions on them.
Thank you very much indeed. I see, and again, I think we raised this as a question last time about I think it was Councillor Goddard about the target for the year, and I see that you've agreed a target for the year.
So yes, we have agreed a target of 1 million for this year, which I'm confident that the team will achieve. Okay,
thank you very much indeed, and I'm sure. Good luck with that. Good work around the grants. I mean, obviously, I think we've all been aware from media stories and such like that, you know, there have been some issues nationally around this. So some good work from the team in that area. Well done.
Thank you, Chairman.
And in respect of the KPIs, I think the committee will probably recognise that it may well be a kind of bit of a bumpy year this year. So you know, I think as ever, the best that you and the team can do, and I'm sure that'll match through to savings made and KPIs turning amber or green, hopefully as time goes by.
Thank you, Chairman.
Any questions or observations? Otherwise, thank you very much again, Zach, and good luck to the team until we catch up next time. Thank you. And agenda item 9 then, the Audit Committee Forward Programme. Neil.
Yeah, thank you, Chairman. Not much to say really. It is as set out in your papers. So if there were any comments, then I welcome those.
Okay, I think the dates are all ones we've had for a while. I suppose it will be a case of watch this space for the February one as to whether it will be online or in person.
Yeah, I mean, the government advises that they expect lockdowns to be lifted in the spring, I think I saw today, so it may well still be virtual as of February.
Okie dokie. All right, thank you very much indeed for that. Any final points, colleagues on the committee? Okay, well, the only thing from me is to say thank you all again for the hard work that you've put in since we last met. It was only a month or so ago. I think the committee wish you all a very happy holiday season, and you know, hope that you all stay well and stay safe, get a bit of time with your families, of course, after a difficult year. And thank you all very much indeed for your hard work in getting the accounts over the line this time around. That's you, Paul, James. Thank you all very much indeed. Difficult job. We obviously had a difficult kind of session last year with EY, but thank you for doing your bit in helping them deliver their bit this time. So thank you, much appreciated. I think that's probably it for me today. We don't have a part 2 of the agenda today. So Neil, if we can bring the recording to a close. Thank you all very much indeed. And we'll catch up in the new year, if not before. But I will open up my email and get that back over to you, James, now.
Thank you very much.
Thank you all very much indeed.